Malaysia right now is 10:09 in the morning, which is equivalent to 11:09 Singapore time. And this is just a recap of what happened the week before. On Friday itself, last week started with a shortened week because we have Martin Luther King Jr. birthday on Monday. So we only have 4 trading days last week, but the market started to unravel at the start go. And on Tuesday, the market started to unravel all the way to Friday early trading, but we saw a robust rebound towards the last 4-5 hours of trading. I suspect that was due to the expiration of the weekly options, which we have a weekly options every week, which expires on Friday. And I think this is just to prevent the put options from being in the money. Okay, so what we may actually experience this evening when the market opens in New York is possibly a follow-through buying. But then again, I do suspect come Tuesday, which is tomorrow, I do expect the market to resume its downward march. So by and large, because we can see that since the market in the Dow Jones traded at a high of 34,712, we likely to see a 3-wave pullback. And at the bare minimum, it should actually test the 32,200 levels, which is an equality move from 34,712. Okay, so this is a 3-wave move. And if this is the very optimistic outlook, then from there, we may be setting a base for another rally attempt. But anything could happen. I do expect prices to continue to weaken and perhaps even to resume its downtrend from last year's high. So we may be in a bit of a flux going forward, depending on how the momentum takes place if and when we see a reversal to the downside. Okay, so do watch out for a massive move to the downside, especially coming in February. We are into the last week of the month of January, so we are in the danger period, because remember, every new period, whether it's a weekly, whether it is a monthly time frame, every time we have a change of a time frame, market tends to shift momentum, so there is a possibility, because we saw largely a rise in January so far. So if January closes on a weak note, going into, especially if you take out the last December low, there is that risk of the continuation of the momentum going forward, because this rebound starting from October last year is already into its 3rd month. Okay, so typically if we can see a rebound, if we cannot last within 3 months time, it will topple over. So we have to see how this market is going to trace out. I suspect the danger will actually begin tonight on January 23rd, because originally, remember, I was telling you guys January 16th, which is the Monday last, which is a Martin Luther King Jr. Holiday, which I actually forgot it was a holiday. So the next likely danger period will be tonight, January 23rd, because there's a change in period on a weekly time frame. Okay, so do watch out for a week closing tonight. Okay, maybe we'll see. Okay, and over in the S&P 500, we see the rebound was actually more robust than what we saw in the Dow Jones. You can see the market actually traded a high of 4,015 last week, and then traded to a low of 3,885 this week. Last week. And then we saw the rebound coming in on Friday towards the last few hours of trading. The market, this rebound is actually pretty robust to the point where it has already crossed the 50% mark. So it may be leading the stage for a higher assault to try to see if we can take out the 4,015 levels, which is the last week high. Okay. But the surprise here was actually not in the Dow Jones, not in the S&P 500. Rather, it happens in the Nasdaq 100. Now, remember, I've been telling you guys this is the weakest link among the 3 major equity index. But last Friday, when the market rebounded, it rebounded by the most. Okay, where Dow Jones and S&P 500 rebound roughly about 1%. The Nasdaq actually doubled those achieved in the Dow Jones and the S&P 500. It rebounded very, very aggressively. Now it has rebounded almost 80% of its entire drop last week. So there's a danger that it may actually surpass the 11,690, which is last week high. So, but when you compare to where the last December high is at 12,166, for this market to actually surpass this level is a bit of a stretch for now. Okay, I do not foresee that happening. Okay, and I'm more biased to the downside. We will have to see what happens in the coming days leading towards the end of the month. Okay, over in Hong Kong, obviously the Hong Kong market is not open. all Chinese markets are closed, including Taiwan, Singapore. All markets are closed to celebrate the Lunar New Year. So this is last Friday high, 25,051. And when the market reopens, there's a danger, depending on where the Dow Jones trade at the particular point in time. If the Wall Street actually soften towards the reopening of the Asian trading hours, then maybe with this target of 22,118, which is my original target for the Hang Seng Index, may actually not happen. Okay, it all depends. Okay, if tonight end up weak, very weak, then of course tomorrow the Hang Seng cannot go up. Okay, so there's a risk that when the market reopens in Asia after the Lunar New Year holidays, the market may actually be experiencing downside. Okay, so same thing to the Shanghai Composite Index. Towards the end of trading on last week, you can see the Shanghai Composite Index traded to the month high of 3,267, which is already very close to the last September high of 3,278. But this is not my main area of concern. My main area of concern is 3,308.35. Now, if the market continues to edge higher and take out this 3,308.35, then the entire momentum will change in favor of the upside. So this is a key level to watch, because this to me is my invalidation point for the bear market that we saw since last year. Okay, so there's a very good chance the Shanghai Composite Index may actually have a chance to take out the 3,308.35 and then revert this market into a bull market. Okay, we have to see what happens next. Over in Tokyo, the Nikkei 225 is still traded this morning, and from the get-go this morning, it bumped up to above 26,000 and traded to a high of 26,885 or almost 86. And this is towards the upper limit of my equality move at 26,872. So the market is slightly marginally about 13 points above my target price. So we will have to see whether there's going to be any follow-through buying. The market is supposed to be very quiet because the Japanese do celebrate Lunar New Year as well. Okay, we don't call it Chinese New Year, we call it the Lunar New Year, because there's a lot of culture in Asia. They observe the moon calendar, the lunar calendar, and a lot of nations, including Vietnam, including of course mainland China, Taiwan, Singapore, Malaysia, we do observe the Lunar New Year. So it's correctly speaking, it is not Chinese New Year, it's the Lunar New Year. Okay, so over in the foreign exchange market, you can see that the dollar continued to slide based on last Friday week closing. Before the market started to slide last week, you can see the market actually bumped up to 130.61. And at that point in time, I was thinking the market is going to rally. So my idea of a dollar bottoming out as far as dollar yen is concerned remains in place, because last week, just before the BOJ went into meeting, which is last Wednesday, market was expecting the Bank of Japan to actually widen the yield curve control, but it did not. It stand pat, and that caused a lot of unwinding in dollar position, and the dollar actually rallied from 127.21 before the announcement by the BOJ all the way up to 131.57, which is a move, almost 400 pip move, and that caused the market to go into a spasm. And then just after that, in New York trading, the market ran back down again, but did not quite take out the 127.21 this time and rebound back to 130. So it has been pretty volatile since last Wednesday. So by and large, I think those who are short dollar are now have already bought back their position. They either have cut loss or they have turned bullish. So there is a risk that the dollar versus the yen may actually trade higher this week. And the key level to me will be 134.80. If the market can close above 134.80 on a weekly time frame, then I think the dollar bottom is already in place. Okay. Over in the euro versus the dollar, we can see that the euro continue to edge higher to 109. Now 109 is a big number from where it was last September. You can see the market was at 95 cents. Now it's at $1.09. So there's a big move in the euro versus the dollar. But unfortunately, the fundamental in Europe is pretty poor. Although inflation is clearly coming off, but still, based on not only the economics, based on the geopolitical situation in Europe, I have no faith in chasing this euro dollar any higher than what it is trading right now. So anything above 109 to 110 is going to be the danger zone for me. So if you are not already long, don't try to long at this current level, because the risk of a reversal is very high. So then again, because my view for dollar seems to have shifted from dollar weakness to dollar strength. So this is definitely not going to be working out very well for me if I'm going to be long currencies instead of long dollar. Okay, so do watch out for a possible reversal in currencies, okay, versus the US dollars. Now the Aussie dollars is a bit of a flux right now. It traded to almost 0.76 cents and then go around all the way to 0.6870 cents before rebounding back to 70 cents where it is right now. So you can see that by and large, what about the danger of the Aussie coming off? There is always the risk, but remember, the Aussie strength is supported by gold prices, so it's a bit of a different compared to the euro versus dollar. Now, Aussie is a commodity-based currency, so if commodity does well, so will the currency. So based on that alone, maybe the weakness, if there's going to be any in the Aussie, will not be so obvious. So do not try to sell the Aussie. If you want to sell, I think your best bet will be either in the sterling or in the euro. Okay. Now next, the other one that I think I will want to sell going forward is this currency here. This is New Zealand dollars versus US dollars. Now, I don't cover this currency pair very much because by and large, it is basically mimicking what we are seeing in the Aussie dollars. But there is a bit of a change. Last week, remember the Prime Minister, the current incumbent, the Prime Minister, Jacinda Ardern, has announced that she will step down in the first week of February. So there will be a change in leadership in New Zealand. So we will have to see what this change means. But I think by and large, I am in favor of selling the Kiwi, especially towards the month end, because like I said, monthly time frame, every time we switch to a new month, sometimes the sentiment will also change together with it. So I'm very keen to see where it closes towards the last day of trading for January. I am more than happy to prepare to go short on the Kiwi versus the dollar because the change in leadership happens within the first week of February. So I think the new leadership is untested. Nobody know who. I think market have an expectation who the new prime minister will be, but again, he's unknown. Nobody know his policy, his outlook. So again, there will be a bit of uncertainty. If that's the case, then of course, weakness in their currency will be quite understandable. Okay, over in the sterling. Sterling has actually went up higher than I thought it would be. So this morning it traded, as we are speaking, the high is traded at 124.47. Okay, so the market high right now is 124.78. Okay, so this is a new high for the sterling versus the dollar. Again, technically speaking, this market has been rising within this rising channel here. This is of course the 4 hours time frame, and prices is trading more or less ever since it broke out of the mid range, has been staying above this mid range. So technically speaking, they may be able to actually hold out for higher prices. At least right now, it has already taken out the December high of 1.2447. Okay, we are almost at the same price but marginally above. So that is actually for time being looking to be playing out well for the sterling. So maybe the dollar strength may come in somewhere either in the midweek or late in the week itself. Okay. As for energy prices, we look at crude oil. Crude oil actually has a bit of a gyration. Last week we saw a high traded to $82.66 because before the market unraveled to trade downwards to $78.45. But since then, the market has recovered back almost 80% of its losses for last week, and now it's looking poised to go higher. Now, when we look at the higher time, look at the bigger picture, you can see that the market bottoms out at $70 per barrel in December last year, and this is working out to be likely to be a 3-wave rebound. And if this is the case, I think there will still be more upside potential. Possibly the market may even trade to as high as $83.87 or $86.97. So this is the equality move target range. Okay, my ultimate target here will be $88.96. But by and large, I do see continued strength in crude oil prices. Over in precious metals, we can see that metals has been very, very stubbornly bullish. We can see that the last week high at $1,937.50. It is the best performing for gold for the last 9 months. So we can see, no, not 9 months, for the last 4 months, okay? Because gold actually stabilized in November last year and started to rally from there. So we can see that for the last 4 months, gold has been only on one single track, which is up all the way. To date, we have not seen a very meaningful rebound. So at this current price, like I say, I don't feel comfortable buying and chasing this market above $1,900 per ounce. Ideally, the market do have a pullback, a decent pullback. That would be much ideal. And if my outlook for dollar is going to be any comes true, then there is a chance that precious metal as a whole may pull back to a more decent price, because the dollar and precious metal do move in opposite direction. Though it is not always the case, but mainly whenever we see dollar strength, we see weakness in prices of gold and silver. So I would love to see some kind of weakness going forward. If not, then I will have to let this baby go, because this is something that I wanted to buy for a long time, but do not have the chance because there was no decent pullback. Over in silver itself, guys, silver started the year on the high end at $24.55, and since then the market has been trading within the boundary. The lower boundary is $23. Okay, so we can see $24.50 and $23 about this $1.50 range. You can see the market has been going sideways. Okay, so hopefully at some point it will resolve itself from this consolidation phase and give us a more clear direction. But by and large, I think I am more bullish on silver compared to gold, because last year we saw silver led the market down, and this year, even before gold market stabilized in November, silver prices already stabilized in September, 2 months ahead of gold, and it has been leading the charge higher. So I am definitely more bullish on silver. If I can get a position on the long side for silver, I'll be more than happy. Okay, but until that, we need to see a pullback. Over in cryptocurrency, we can see that crypto as a whole has been on an up and up. At the beginning of this year, we can see that for some reason, crypto prices has been rallying very aggressively, led not only by the Bitcoin, but the other token as well. You can see the Bitcoin on Sunday itself, the market went up to $23,366.56. This is the highest it have ever been for quite some time now. Now, this is the first inkling that something has changed in the crypto world. Not so sure what is the catalyst that caused the crypto prices to rally the way it did, but I suspect it got something to do with the Federal Reserve interest rate posture. Remember when the Federal Reserve started to hike interest rate from 0 in March last year? That was also when the crypto prices led by Bitcoin has been falling. It has been falling and falling all the way to the end of last year, and now inflation looks to be more or less a peak in the US, especially when you look at the official consumer price index. From a high of 9.1% in June last year, it dropped to 6.5% in December. So there is a very distinct drop in inflation if you trust this consumer price index. What is telling us, even the producer price index is trading to the lowest point this year. So by and large, if you look at this official number, you will think that the Federal Reserve would have won its fight against inflation. And if this is the case, then there is no more the rationale why the Federal Reserve would need to continue to hike interest rates in an effort to tame inflation, because from the official number, it looks like inflation has been tamed. Okay, so that gives rise to the idea that perhaps going forward into 2023, if there's going to be any rate hike, the last one could be coming up in next week on February the 1st, when the Federal Reserve will meet for the first time this year to decide on the quantum of the rate hike. Market has already priced in a 0.25 rate hike. So what happens after February? There's an idea that after this next rate hike, the Federal Reserve is going to pause its rate hike cycle and then to observe, which is also makes sense, because from the time you start to hike rates, remember last year interest rate was near 0, and at the end of last year in December, interest rate was at 4.25%. From 0 to 4.25%, that was very aggressive rate hikes. And typically, in order to see real results, because it takes time for the result to filter through the economy, typically there's a lag time of about maybe 6 to 9 months. So it is quite logical for the Federal Reserve to take a pause and to allow the numbers to work through the economy, and then we will judge whether those policy has actually achieved its policy goal. Okay, but if the Federal Reserve hard target is at 2% inflation, then I think it is almost impossible to achieve, because the last number we had was 6.5%. From 6.5, if you need to really bring down inflation to 2%, that means you will have to hike rates by another 2-3 more percent, which is totally impossible. The economy is going to crack. Okay, the economy cannot sustain interest rate at 6% and beyond, because it's just not possible to have growth and inflation control at the same time. Something have to give. So which is the bigger fear of the Federal Reserve? Is it inflation, or is it that the economy may go into a recession? So either way, it is a Hobson choice. Neither choice is going to be good for the Federal Reserve. So it's logical for the Federal Reserve to actually want to actually pause for a while to see if those policy is having the intended impact. Okay, so going forward, that's the reason why I think the crypto world beginning to have this idea that if the Federal Reserve is going to slow down its rate hike, maybe at some point in time, if the recession actually happens in the States, the Federal Reserve may be forced to do a policy U-turn, to do actually a rate cut, and perhaps even launch a quantitative easing. That will be music to the ear for a lot of risky assets, because that means liquidity is coming back into the market. It's just like in a while we have the coming the rainy season, and all the animals will be very happy. So basically, I think this is what the market is really looking forward to. But I think they may be getting ahead of themselves. Okay, there is no sign the Federal Reserve is going to cut rate. Yes, there are possibility it may actually pause for a while, but talking about rate cut, it needs something more for the Federal Reserve to actually do a U-turn. Because if they started to do a policy U-turn so soon after they change the policy from going from massive liquidity to draining liquidity, then it will cause a credibility gap here. Okay, so I do not believe the Federal Reserve will do a U-turn unless something major happens. Okay, so over in Ethereum, we saw that the highest price traded over on Sunday was $1,680. Again, this is the highest it traded since December last year. So you can see this market has actually gone by leaps and bounds. It has gone up more than $500 per coin. So this is very aggressive. It is like more than 25%. You can see the growth in this token itself. In one single month, you have gone up by almost more than 20%. This is a little bit excessive. So it's time for the market to maybe consider to take some money off the table. And if that's the case, then we may have a chance to see some retracement here. Okay, over at Ripple, there's no major sentiment here, but this morning there was sign that the market is wanting to go back up again. The highest traded so far this month is 41 cents from a low of just under 30 cents. So you can see that this is again a more than 20% move. But again, I think the focus is not on Ripple. Okay, the focus is more on the other coins, especially Cardano. Cardano has actually gone up quite aggressively from where it was in December at just under 24 cents. Hold up all the way to 37, 38 cents, 39 cents. So you can see that this morning we see a bit of a profit taking. And this is also quite true because we have a very long-term resistance line here that has been in existence since last year. I think somewhere in the middle of, I think either September or April, okay? May, okay? The resistance line here has been in place for more than 6 months. So this is a very critical line here. And if the market can actually trade beyond this resistance line here, then it will give the bull another reason to ramp up the prices. Okay, so right now as the market approaches this more than 6 months old resistance line, market is becoming a little bit more cautious. And like I said, if we can actually cross beyond and stay above, then I think it does give the bull another reason to ramp up prices. Okay, so we have to watch this market as it unfolds. Now the one that actually has been very strong has been this other coin called the Solana. Now Solana, actually was a victim of the FTX blow up. When FTX collapses, a lot of people associate this particular token with FTX because this coin is mainly used for NFT, which is, if you do not know, NFT stands for non-fungible tokens, and this is the main coin that drives NFT. And NFT, unfortunately, is also very closely linked to Alameda, which is the research arm for FTX. So when FTX imploded, so anything that's associated with either FTX or Alameda has also come under attack. Okay, so you can see last December the price of Solana went up to below $8, and now it is above $26.57. Okay, so this is a major move for Solana, and I think the market has been convinced that it has more or less detached itself from associating with FTX. So the market is very bullish on Solana right now, and this can be seen in the price chart here. Okay, guys, this is all I have for you for today. Tomorrow, I'll be reporting back from Singapore. In fact, I'll be going back in the next couple of hours, and I shall see you then. In the meantime, do take care. Bye-bye.